Hello, everybody. I believe we started with a webinar on Africa, and it's really an honor to also talk about this continent because it's a big continent, very beautiful. And to my sorry, I didn't have a webinar on Africa in my life, so this is the first time, and I'm really honored that we can do it. And I am Theo Elshoff. I'm the presenter from Cantera Global. I'm a partner of Cantera Global and the founder in 2013. We have now around 25 people in the Netherlands and a global footprint and 2 offices in Amsterdam and in the south of the Netherlands. And before I was heading the APA team of the Dutch tax authorities for a couple of years. Before that, I was tax manager of stock quoted companies. So I've a little bit been around now for 8 years with Cantera Global. And I'm very honored that I can do this webinar with a highly respected colleague of mine and with his own company in Africa, Nico Kruger. And Nico, I would like to give you the floor for introduction.
Good afternoon, everybody. Yes, thank you for the introduction, Theo. Basically, our firm commenced in 2015, so we've been around not as long as Cantera, but we've managed to get well established during the last few years in Africa, and we basically just specialize in all kinds of transfer pricing, advice and documentation, benchmarking studies and so on, focusing purely on Africa. We're a small team of 3 people, and that's a dedicated team, and thanks for the opportunity.
Yeah, and the opportunity is well deserved because why Africa and why with Nico? We have more and more clients with operations also in Africa, a lot of mostly in South Africa. So we did some real nice work with Nico on documentations and benchmark studies, which is in Africa really challenged because of the lack of data, but that's to you, Nico, to discuss about. I myself did in the past a big TP design and documentation from a stock quoted multinational based in South Africa, and that was a very nice experience, and I luckily also for the client, that's also the best. That's one part of it. I think it is all because Africa is developing in this field and transfer pricing very rapidly, but that's is also an important item, and also because there is I can see Africa as a sleeping giant. So it is a very small GDP, but it is really full of initiative and also challenges, and that's also the reason for doing this. And we discussed how to do it in an hour because there's a lot to talk about, and we said let's first do this first webinar on more the documentation requirements and slowly going into what's happening in the countries. And we said we should do a follow-up on more international tax aspect of withholding tax and other issues for the next time. But if you have questions on that field, please also come forward, and most probably we will then gather the questions and come back to you separately. But if it is possible, we will get all the questions which are today coming in and answered after the webinar. We will share that with you when we share also the presentation. So therefore we will try to get the utmost for you in this webinar. Okay, and you can give your questions, I believe, through the system, and we will then take them on board and see if we can handle them immediately during the webinar or later. But that's I think to see what's going on. I'm very interested to see what questions are coming up. Okay, then the index. We will do, like I said, we will try to deal with the documentation developments within South Africa in this webinar. There's the focus on. But first we will have some first general remarks on Africa. some alignment issues with international guidelines, then an overview of the compliance development in Africa, and we'll do it in general, but also for specific countries. I believe, Nico, you also did something specific on preparation on South Africa, and that will be the last country to discuss. So that will be, I think, highly interesting. We will end it with key takeaways, and then maybe there's still some Q&A, questions and answers. Okay. Then maybe next slide. Yeah. This is more a very general slide, and I will not talk too much upon it, but you'll see that Africa is a high growth continent. I think they have 12% of the population worldwide. There's one of 8 people are living in Africa, with all interesting initiatives, also with the internet coming along. But they have 3 or 4% of GDP. And that says it all. There's a lot to be gained in Africa on that field, and also a lot to be defended. And what happened to the COVID period, as you see on the right, is a little bit difficult, but we discussed it, Nico and I. Africa has a slight impact of recession, but like I said, the GDP is not big. The relative speaking, the impact of COVID there is far less than, for instance, in Europe. But if you see on the graph below it, you see all kinds of colors, and the light colors are Africa, and the dark colors are like the US, and then you immediately understand why it is light and dark. That is, the GDP in the US is far higher than in South Africa, than in Africa, and that's something that bothers a lot of people. And if you now see what the policies are on, is that, for instance, and that's the first one on health sector, and that's understandable, certainly in the COVID period. That's important. But the second one is also on monetary and fiscal support, and that's something which we will go into, I think, in this webinar. And the last one is digitalization of the economy and the diversification of the economy, and that also will give some challenges for the taxation. Yeah. Okay, so that's why Africa is very interesting. It is really a continent with a lot of challenges, but also a lot to be gained. This is more as an overview. Africa is, you see that they are highly depending on resources like oil and gas and other resources. And if that's not the case, they are countries depending on tourists, the tourism, and that's something that is a challenge for the African country to get the revenues and the results for the resources to build on the tourists, but also to diversify the economy, that they have more possibilities to get revenues in. And you see that there is low and middle income in the countries. High income, we didn't have any countries, so there's a lot to be gained in this sector as well. Okay, that's more to give you an overview of countries, because I believe there's for 54 countries in Africa. It is a continent. You can't say that there's one perspective, one focus, but I think this is more in general, when you look at the African countries, what we just try to get a high level overview in a couple of slides. Okay, yeah. And that's my last slide, which is more general, and then we go to Nico for his more interesting, I think, TP documentation remarks. What you see that Africa is working on being a member of the international community, and transfer pricing and the guidelines is one of those. Yeah. In 2008, I believe, or 9, ATAF came together. That's the African Tax Administration Forum, which tries to deal with that issue with a lot of support of the OECD, United Nations, but also countries like the Netherlands. A couple of my former colleagues, when I was in the tax authorities, sometimes travel to Africa for courses, so that's good. And what they try to help is with the tax legislation, the documentation requirements, but also what I was also head of the APA for the Dutch tax authorities. Therefore, my specific focus of sometimes is how to deal with certainty in advance, like APAs, and if that's not possible, the MAPs, that's the mutual agreement procedures, where you countries talk with each other when one country has done an adjustment and the other one is asked to follow that adjustment. That is a mutual agreement procedure between countries. So that's developing, because that's also part of the puzzle on transfer pricing, that you get certainty in advance of avoid double taxation. So I'm very keen what Nico would tell about, and maybe in South Africa we can go into more detail. And the last, what is extremely important, is training of tax authorities, because it is good to have somebody opposite you on the table that understands the complexity of transfer pricing and can be a partner where you can discuss with and agree with. And that's what the ATAF and the countries are trying to do. So there's a lot of interesting developments going on. And that's maybe for you, Nico, to take it over from here. Yeah? That you give the overview of what are recent developments in Africa. So we discussed it a lot also with clients. So please take the floor, Nico. I think that Nico is still on mute. Yeah.
Yeah.
Okay. Sorry about that. Yeah. It's quite a short time to discuss quite a few things, but so a lot of it would be discussed quite briefly, but of course it can be discussed in more detail should you be interested at a later stage, or if we've got time for a follow-up discussion at some stage. So to start off, basically in terms of Africa, and I think I will start off just giving a broad overview of how things have developed for the sake of people who have not sort of been involved with this a lot. Basically, the transfer pricing provision started off, I think, in South Africa probably, and in Nigeria were the two first countries that started implementing transfer pricing. In South Africa, it was in around 2000. What happened in a lot of African countries was that legislation was passed or came into place and certain rules, but there's generally quite a time lag between, in most cases, between the time that legislation has come into place and the time that it was actually starting to be implemented or aggressively implemented. So in South Africa, for example, legislation was introduced in 1995, but only in around 2001 it started to be implemented, and it received a lot of guidance from overseas, from the UK and the US, from their revenue authorities, and so gradually a team was built up through the years. And initially also it only focused on soft targets such as interest and services, and as it got more settled, the focus shifted to certain industry areas, which is still the case. And during the past 20 years, it's had its ups and downs in terms of the team, and which is generally a concern in Africa, a concern in terms of resources and skilled teams. It's always been a bit of a challenge, not only in South Africa but in many of the other African countries. As I said, Nigeria has also had it in place for quite a while, and then basically it started to expand throughout Africa, and in the last 5 years or so it's actually started to rapidly expand the introduction of transfer pricing legislation and rules, or where it has been in place, the implementation thereof. And what has happened is that the revenue authorities have learned from each other. I know that South Africa, having learned from the UK and US and other countries that have done it a lot longer than they have, a lot of the African countries have then obtained guidance from South Africa in terms of implementing their own legislation or rules, or improving it or implementing it. And generally, it's the OECD guidelines that are followed, basically almost throughout, which makes it a bit easier in terms of dealing with transfer pricing, since it is the same to a large extent, with some exceptions in terms of here and there, perhaps a specific language, but generally the format is the same, and also the methods, of course, being used is generally the same. In terms of the use of databases, there's not a clear prescription, but because of the lack of African data, unfortunately, there is not an African database on its own, and probably there never will be, due to the lack of availability of data. And therefore, revenue authorities generally accept European or worldwide databases such as Thomson Reuters OneSource and Bureau van Wijk's, Amadeus and Orbis, and so on. And then if one does a benchmarking study, we always try to, there is a section on Africa that you can include in terms of the region, so that's obviously always included, but one is not always that lucky to obtain that many comparables from the Africa region, and therefore necessitated in a lot of instances to make use of other comparables, and we try to then use regions that are also more in a developing phase, or developing countries such as the African countries, and make use of those regions and countries when we do a selection in terms of obtaining proper comparables. So that's the only way.
Nico, there's a question coming in, and I would like, maybe that's the positioning is here. Are the African tax authorities also having their own databases so that they can check it from themselves, like in South Africa?
Yes, yeah. In most of them now, obviously, where they are, well, even where they are still relatively new, they do have their own databases, and I think it's more a question sometimes in terms of the skill level still, but they do get a lot of support and training from ATAF and some other countries in terms of upskilling themselves. So yes, it is generally that they've got their own databases, which they then will, of course, test the benchmarking studies or the reports that are presented against their own studies to make sure that they agree with it.
So when we did the last search together, that sort of searches, when they see if they can go to the strategy and do the search for themselves, like that they can read all the sheet.
Yeah. Okay. I think generally because we follow the same, again, for example, in South Africa, and it would apply to the others, because we generally follow the same exclusion steps and processes in terms of obtaining comparables. In most cases, it wouldn't be challenged, but if they do feel that strategy was followed that's not in line with what they think should have been followed, or there are companies in this final set that shouldn't be there, and it's not close enough to to what they have achieved, or there are exclusion steps that they do not agree with, then of course they can do their own search and compare it, and then challenge the results that were presented by the taxpayer.
So it is extremely important that your economic search has the quality that it should be. Okay.
Yes.
Okay.
Yes, it is. I mean, that is always the most important part of it. I mean, the rest of it, all of the reports, of course, lead to that in terms of the economic analysis. So it's very important that is that is done properly, and to reduce the chance of it being challenged.
Yeah. Okay. Thank you. Oh, thank you. Sorry, that question popped up just now, and therefore thank you for the answer. Okay.
Okay. Yeah, I couldn't see the question here on my side, but okay. All right, and then so that's basically in terms of the benchmarking studies that are used. And then if we get to the BEPS, or the base erosion and profit shifting signatories, I guess maybe again just as an overview, not to jump into that, is that of course the OECD has embarked on the BEPS initiative quite a few years ago already, and there's been various developments on that, and it will be on a continuous basis, of course. But in terms of starting out on it, a few countries have initially signed the agreement in Africa. South Africa being one of them that has signed it in 2017. Also, in terms of the other countries in Africa that have signed the agreement, was Cameroon in 2017, Gabon in 2017, Kenya in 2019, Mauritius in 2017, Nigeria 2017, and Senegal 2017, Tunisia 2018. Yeah, those are the current African countries that have signed the BEPS agreement. The fact that they have signed it doesn't mean that it's been implemented. Quite a few of them have not implemented it, and we'll see when we get to the specific countries. Some of them have recently started to implement the BEPS provisions, but basically what it entails, for the people that have not got background knowledge of it, and very briefly, is that in terms of the BEPS provisions, it's a global initiative to share information between revenue authorities, and it entails a 3-tier system. Firstly, in terms of the country-by-country report, and then a master file, a group master file, and then local files for the countries and for the entities in specific countries. So it basically starts off with a country-by-country report, where it provides figures, and which would be the sort of the first port of entry for revenue authorities to have a look at, and to see whether there appears to be certain red flags, if you can call it, for a particular group, and then from there they will generally look at the master file, which is a high level. It provides high level information on the group and the entities within the group, without going into too much detail, and certain information is required to be included in a master file. And then from the master file, it would then flow, or an investigation, if needed, would then flow into the local file in a particular country. And in the local file, it focuses on the specific entity in that country with a lot more detail. And in that local file, of course, you then have to provide information. Well, there are specific information required, but it's basically in terms of the entity and what it does, what intangibles it has, loan financing, whether there's been changes and all kinds of information like that, and also in that local file, the entity would then have to support that it is transacting at arm's length, and it has to provide the support as to why it is of the view that it is in fact transacting at arm's length. So that's basically the background of how the three-tier system works. There are certain thresholds in most countries. There are thresholds above which the BEPS and the three-tier documentation would apply or kick in, and if it's above the threshold, for example, again, so in South Africa and in Zambia, for example, it is the equivalent of 750 million euros, or in South Africa more than 10 billion rand, the global turnover. Or it can also be, for example, again in South Africa, with the cross-border transactions, if it exceeds 100 million rand annually, then it also requires the BEPS documentation to be prepared on different levels. So, sorry. Did someone want to say something?
No, Nico, please go.
Okay.
Go ahead.
No, I thought there was a question.
I was recalculating. I was recalculating the 100 million around. I believe it's around almost 6 million euros in the company for South Africa.
Yeah. It's something like that. I'm not sure what I think it's about 20 rand or something to the euro, but yeah, so it's it's obviously a lot less, yeah.
Okay.
Okay, so basically these thresholds are put into place, and then in a lot of the countries, if you are below the thresholds, you are still required to prepare documentation to support your pricing. It is just not so extensive, the requirement in terms of what needs to be included in most instances, but you still have to provide the support that you are transacting at arm's length, and the extent thereof does vary between the countries in Africa. Some are stricter than others, but generally the requirement in most of the large African countries is that you have to provide some kind of documentation or support that your transactions with associated or related parties are at arm's length. And okay, then so that's basically the story on BEPS. When we go into the specific countries, you'll see some of them that have recently also started to implement the BEPS provisions quite recently during the last year or so. Okay, if we look at more generally in terms of one of the issues for Africa, as Theo has mentioned also, one of the concerns for Africa is the fact that globally there's this move towards a digital economy, and I think probably COVID-19 has sped up the process towards moving in that direction. And the problem, I mean, which obviously means that a lot of stuff is done online, a lot of marketing is done online, and ultimately it leads to a lot less presence in certain countries, and a lot less presence specifically, I think, in a lot of African countries for various reasons. As I say, apart from the fact that with COVID, there's a move towards online, working online and doing things even more in a digital way than before. And the concern of that for African countries, and it's quite a big concern, and it's something that's sort of being discussed a lot, and efforts being made by ATF. As I've indicated, ATF does a lot of work in terms of Africa and trying to assist. So a lot of thought has gone into how the fact that there's this growing digital economy, how to try and prevent sort of erosion from, if you can call it, from Africa in terms of profits, because if there's less presence in the particular countries, or specifically in the African countries, then a lot of instances, most of the profit would then flow towards the parent companies or the more developed entities from where the digital business is basically being conducted, and this is still going to be needed to be discussed and dealt with, I think, for quite a number of years. There's certainly not an easy answer to it. There's been certain proposals, and I think one of them is that instead of sometimes the traditional methods of taxation being implemented, that it's being altered in certain instances, for example, in terms of profit splits and stuff like that, rather than other methods being followed. But that also, of course, may have its own problems. So it is it's not an easy issue to address, but it's something that globally we need to be looked at. Otherwise, it could lead to a lot of unfairness in terms of profit allocation towards African countries. Okay, and yeah.
Maybe comment. I think it's good to follow that development as well in Africa. You see it also with the OECD on Pillar 1 and the whole discussion. Yeah. I saw the report on ATAF on the digital service tax. Also something like that happens, and so there's a really development to follow. And I also saw some reports of the ATAF on profit split. So there's really something that the community in Africa is also discussing. So I think it's good to follow this as also when you have activities in Africa, that you also look into Africa, what's happening there. And what I see in the rest of the world, I see a lot of specific new laws on taxation, on revenues, on marketing costs that are positioned in countries, so that there are all kinds of possibilities for countries to get their own base for revenue in. That's something also could happen in Africa, I understand.
Yes.
It's very specific. So if you have activities in Africa, you should also look into what's happening there in those countries where you have a presence.
I think one of the other concerns, and that's also going to be an ongoing concern, is even with the Pillar 1 and 2, and in terms of changing the methods and so on, and so some of these proposals, I think would probably be a bit too complicated and difficult for many of the African countries to implement. So that is a concern in terms of having the necessary skills in those countries and the revenue authorities and so on to to implement a lot of the proposals that are going around at the moment, and it is something that's going to be a challenge going forward, where there are talks of changing methods in terms of pricing and allocations and so on. So yeah, it's going to be an ongoing challenge, I guess, globally and even more so in Africa, to try and ensure fairness for those particular countries.
Okay.
All right. So I think if we then have a look at some of the specific countries in Africa where there's been developments, I think I've got Zambia basically as the first slide, because Zambia is probably the country in Africa that had the most sort of progress in terms of transfer pricing in a very short time. And I think Zambia is probably can almost be regarded as the strictest, or at least one of the strictest countries in terms of implementation. It started off in 2018 with the legislation and very comprehensive guidelines being published, setting out what needed to be included in their reports. And even though it has not implemented the BEPS provisions at that stage, in its guidelines and in terms of what was included, and even in terms of what needed to be provided in the tax returns and so on, which had to be filed annually, there were quite a few things that were taken from the 3-tier requirements that had to be included in their local documentation. So they basically had their local BEPS file, even though it wasn't formally a local file and a master file and those types of things. And the information that needed to be included were quite extensive. Now they have formally introduced the BEPS country by country rules with effect from 1 January 2021, and it's as you can see, it's applicable for years of assessment ending on or after 31 December 2021. So it's brand new, and it's in line with certainly with South Africa in any case, and you can see the guidance and so on again between the revenue authorities. It's very similar, even with the initial documentation requirements. It was very similar to that of South Africa, for example. Of course, they're also not too far apart, and one can see there. So it's also 12 months after the last day of reporting that it needs to be filed, and that it indicates certain information that needs to be included. Yeah, I'm not going to be going to too much, as I've pointed out. It's the threshold is for it's 750 million euro also for the documentation to be required to be prepared and filed. I think if we can go to the next one. Oh yeah, okay. So I don't know if there's much more. I mean, there's a lot more that one can say about Zambia and the new provisions, but I think from a time perspective, we're probably not gonna have time to go into too much detail.
May I add, Nico? Theo? If you have questions on a specific country, then let's them get the question in, and we can get back to it maybe to all with the answers, or that we have a specific call with somebody that really would like to go into a company of a country like like
Yeah.
Zambia. Okay, so then we can, because we have a lot of countries to cover. Okay.
Yeah, it's going to be impossible to even remotely go into a lot of detail into any of them. But of course, if there's a specific need for a country, then and we can always deal with that on a case by case basis where required for on a future occasion. Okay, and then in terms of Ghana, you'll see that transfer pricing regulations were introduced in Ghana. It's also one of the countries that have progressed quite a bit in terms of their transfer pricing. So transfer pricing regulations were published in 2020, and basically again it adopts the provisions of the OECD and the BEPS recommendations. So they've also moved in that direction, and yeah, it was published on 10 August 2020. So they've also moved towards the OECD guidelines and adopting the BEPS provisions going forward. Okay. All right, Nigeria, as I've indicated, has been a country which has had transfer pricing for many years, and they've also been implementing it for quite a while. So it's one of the countries where you have to be careful in terms of making sure that your documentation and your transfer pricing affairs are properly in place. It's governed by the transfer pricing regulations of 2018. Well, it was from 2012 initially, and then there were more transfer pricing regulations in 2018, and then during 2020 they've had further developments, and this has resulted in taxpayers having to have proper documentation in place to defend their cross-border transactions, and what they saying in terms of the 2020 changes, they've made provision that you have to take into account, of course, the impact of COVID-19, which is interesting that they've already accounted for that in terms of the amendments, and because of all of these further changes, it of course places an even greater burden on the taxpayers, as I've indicated, to make sure that it's properly drafted and the returns are filed and the country by country report and so on. So it's also one of the countries that you have to be very, very careful and make sure that if you do transact there, that you comply with the relevant compliance requirements and documentation requirements. Okay, I think we can go. All right, Tunisia. They've also now, well, not now, but in 2020, they introduced the BEPS country by country guidelines. So it's also one of the countries that started implementing it. As I've indicated before, a lot of the countries have signed the BEPS agreement in 2017 and a few in 2018 and 2019, but quite a few of them have only started to implement it a bit later, and you'll see with these countries now, quite a few of them have started to implement it during 2020 and 2021. I don't know whether the reason for all of this having started sort of, or quite a few of them having started from 2020 and now if it has to do perhaps with the fact that COVID-19 has, of course, resulted in a lot of revenue loss, and as is the case with South Africa and well, not only even Africa, but globally, there would be a need for a lot of countries to try and gather more revenue. And of course, transfer pricing is one of the favorite ways of doing that, and it may be that has sort of sped up the implementation of the BEPS provisions in a lot of these countries. In terms of Tunisia, you've got the threshold there, and it's in line with the OECD, obviously, and yeah, it's basically just it follows a 3-tier approach. And also, as with South Africa and Zambia that I've indicated, it's due within 12 months after the end of the reporting financial year. So this 12 months thing is probably going to be adopted for most countries where they implement the country by country provisions. Okay. All right. So Cameroon has published their legislation in 2019 or the end of 2019 for 2020. So it's not brand new, but it's also relatively new. And you'll see that the general information of the associated enterprises are indicated. What needs to be included. I'm not going to go into too much detail of that because that's generally the case for all of these countries that have adopted the BEPS provisions. They will indicate what needs to be in the local files and so on, and it's guided by the OECD, of course. So it's a statement of their holdings, a general descriptions of the activities and changes, general description of the group's transfer pricing policy, and as is normally the case as well, a list of the intangible assets held by the group and the particular entity, and so on. So it also prescribes the information that needs to be included. Okay. All right. Yeah. Basically, then just you can see there specific information that needs to be included. So yeah, the activities that's carried out, the transactions between the entity and the associated parties or the affiliated enterprises, as I refer to it, statements of loans and borrowings. Yeah, so very specific information that's required. Okay, all right. Then Rwanda is also an interesting country. Not I think so much even from a transfer pricing perspective, but it's definitely one of the countries that have progressed the fastest in Africa from where it's been. I don't know how many people would know. I mean, with Rwanda, in terms of their war and so on, they were basically destroyed the country, and well, it's quite a number of years ago, but they have rebuilt the country and the economy quite brilliantly, specifically I think in the last few years. And I guess in line with that, they've also joined the party in terms of transfer pricing. So you'll see that also on 14th December 2020, they introduced a new general rules on transfer pricing, which is in line with the OECD and BEPS, and that replaces the previous rules that were initially introduced in 2007. And again, without going into detail, it prescribes certain things and as to when it would apply, and I think what's of interest is the rules permit both transaction-based and transactional profit-based transfer pricing methods. Generally, both of them are in place, but previously in Rwanda they only used the transaction-based methods. But in most of the countries, they use all of the OECD methods. So they've also at least progressed towards using all of the methods in Rwanda. And then they've got certain specific rules for services and intangibles. And for intangibles, the contractual arrangements and certain other specific factors are taken into account when determining the arm's length price. Okay.
Yeah.
All right, and the DRC, it's not too much to be said. They've just introduced some changes in 2019, and which basically relates to the revised deadline for the submission of transfer pricing return, which must be submitted within 2 months following a tax return, where it was previously 6 months. That was with effect from 1 January 2019. Okay.
Question on this, we will go to in South Africa. I have 2 questions. Do you need to have the documentation like master and local file ready at the moment that you file your tax return, or is it asked for after a certain period, like with DRC?
Yeah,
has it to be sent in when there is an audit, or they're all different?
Yeah, it's the same as with Zambia, as I've indicated as well, and it's 12 months after the end of the reporting year. It must be submitted 12 months after the end of the previous reporting year. So it's basically, if your year end is 31 December, for example, then for 2020 it'll have to be 31 December 2021 as an example.
And Nico, that's for the master file, local file, and if you have to do it also CBCR, so the country by country report for all 3.
Yeah, the generally, if the rule is that if the parent company is not in South Africa, then you have to file the local file, and the ultimate parent company would normally file the country by country report, and then it can just be referred to when the local file is filed that it was filed by the parent company. I think you can file all of it, but it's not a requirement as such for the local file. The onus is on the ultimate parent company to file the country by country report, and also even the master file. So where the master file is filed also by the ultimate parent company, it must also just be referred to or indicated to SARS that it was filed by that particular company. But we advise in these instances just to file the master file as well if one is in place. If the ultimate parent company is not in South Africa, and there is a master file in place, then the local entity will generally file that. But if a master file has not been prepared for the group, then it wouldn't be expected to file or prepare specifically a master file to file. But if one is in place for the group, then it would generally file it with the local file.
Okay, thank you. Okay, and then maybe your country, South Africa. No.
Yeah. Well, that's what I was talking about, John, in terms of South Africa. So as I've briefly mentioned, South Africa signed the BEPS as one of the first countries, or probably I think the first one that signed it in 2017, and it has been implementing it from 2017 as well. So it's been quite a few years where there's been the requirement to file the local and master file, or if the parent companies in South Africa, all three of them by the parent company, 12 months after the previous reporting year. And it's been, in terms of penalties, they've been quite lenient in terms of penalties for quite a few years. I think they're getting a bit more strict now in terms of enforcing penalties if you haven't done that. And then also there are extensive guidelines, BEPS guidelines that they've published in 2018, I think, and they've now brought out amended guidelines on the BEPS guidelines, and it's very comprehensive and quite user friendly in terms of what needs to be and how it needs to be done and so on, and how it needs to be filed. Yeah, it's quite a thick document. But basically, I think in line with that, or in addition to that, apart from the BEPS documentation, that is of course about the thresholds that I mentioned of 100 million cross-border connected per person transaction, or the 10 billion rand global turnover. If you are below that, then in terms of the Tax Administration Act, you still need to prepare documentation in support of your transfer pricing, and basically, so that also, even though you don't have to file it annually like with a BEPS documentation, you have to prepare it and have it in place to support your pricing. And then also in terms of the tax returns, it's got a lot of questions where they ask if you've got documentation, all those types of things. So and if you don't tick the box, then the assumption is that you're probably more on the list of being scrutinized and so on. So the requirements is just a little bit less if it's below the thresholds in terms of what should be in your documentation and so on, but you still need to prepare it. And then in terms of we almost running sort of at the end of the session, but basically in terms of, just briefly, in terms of advanced pricing agreements, and I think that generally applies for Africa as a whole. I think it's only Nigeria, Uganda, and Tanzania that have got APAs in place, but it's not regarded to be done very successfully, and so on, for various reasons and so on. So APAs, even though it would assist a lot, is a bit of a challenge in Africa. In South Africa, they've brought out a discussion paper now very recently in terms of APAs, where basically it was said that they will start looking at it in terms of putting the documentation in place and then starting to get things going, but it's throughout the years that they've always been reluctant to do so, and that applies to most of the other countries. And the reason for that is a lack of skilled resources and teams. Specifically in South Africa, they had a very strong team, and then with all of the problems in South Africa in terms of state capture and those kinds of things, and capture of the Revenue Authority, which is now starting to recover rapidly. They've admitted that they want to look at that, but they're still building up the team. So it's going to take a while. And I mean, they've acknowledged that in negotiating an APA, it's going to take 3 to 4 years to negotiate something like that, and so on. So it's in the pipeline, but I don't see it happening that soon. Maybe sometime in the future, once there are established teams in the revenue authorities, and they've got the sort of confidence to be able to handle an APA and to negotiate it properly, because it needs to be done properly, of course. And then just basically in terms of information sharing. South Africa has also brought out a discussion paper on maps and so on, and basically in terms of the information sharing, in terms of the procedure, the guideline is basically that you first need to approach the local authorities from either the one or both, and then if it can't be sorted out, then the process would be commenced in terms of the in terms of the process. Sorry, it's getting a bit.
Nico, you're also talking a long time on talking about highly interesting countries, what happens, and we had a discussion on this up front. How to deal with Africa as a continent on transfer pricing and risk management, and we had an agreement alignment on it that it should be at first robust the TP documentation, that you are compliant and that you are in control, and the other side proactively involve tax authorities. That's maybe something for the next years, but that is at the moment maybe not the preferred route. So when you go for risk management, yeah. But I think that's saying, and for the people listening in, we will give you the slides and maybe also some links to what we mentioned, and like the guidance on South Africa. And Nico, for certainty's sake, I think we will certainly discuss the questions that came in, and we know there's a lot more to talk about, but certain specific countries and on items like we didn't go into, like withholding tax or others, so deadlines specific for our countries. But I think that's for next time a very good follow-up. And if you okay, Nico, I would like to go to the key takeaways, because we promised the people that we would try to be within an hour, and certainly I learned a lot by preparing this with you and looking at the slides, and then I see a lot of similarities with what happened in Europe when I started in '95. Some head of tax of a big multinational said to me, "What's transfer pricing? You do it already in '95." And they will not ask that question again to me nowadays in Europe. And I see a lot of similarities in Africa, but you're really rapidly growing into the guidelines, and that's the first takeaway. Africa is increasingly moving towards transfer pricing. I think digital economy and taxation is also a hot topic, because they need to safeguard the tax base, and that will be extremely important to follow. It is a dynamic continent where the TP requirements should be on the radar if you are active there, because I think that's and the last takeaway refers to that documentation is more and more key. So if you have some intercompany transactions in Africa, I think we should look into it, and they most follow the OECD requirements, but I know that the devil is in the details. So like in South Africa, I think it's very important that we have this connection, that we know exactly and find each other, Nico, to make certain that the companies have that robust documentation in place and they are on time. Because like you said, penalties are coming as well into place, and
they're very, especially in Zambia. They're getting more and more aggressive. I think basically what it comes down to is where Africa may have been considered, let's say, 5 or 10 years ago as a continent or countries where you didn't really have to pay much attention to transfer pricing and just had to focus on the other side, maybe in terms of the other countries where it was dealt with more aggressively and so on. That has certainly has changed, and it's, as you can see, just in the last last year or so, how many countries have come on board. So it's definitely a question of when you have got your entities or your business in Africa, you must make sure that the transfer pricing is in place and properly in place in those countries as well.
Like you said, the COVID has hit the
Yes.
revenue from the tax authorities heavily, and that will mean that maybe they will help you now with in the COVID times, but they will come after you after the COVID times. That is also in Europe the case. So be prepared. That's okay. And then I would like to say thank you very much, Nico, because we had some really interesting talks preparing this webinars and some very nice working together with clients. So I hope we can have a follow up on this and with clients and listeners into this webinar. And this is recorded as well, so we can share it, and we will share the slides, and we will see if we can send something more with the slides so that our listeners can have more information which is as backup use for this webinar. So thank you, Nico, and
thank you.
Yeah.